I don't want to say I told you so because I like you guys, but I kind of told everybody else in the world out there, don't get suckered into this move yesterday because we just unwound it in a brutal way. And yeah, it's an ugly day out there. But because you are in the 10-minute trading room, you knew ahead of time how to react.
This is the How to Trade Stocks and Options podcast, brought to you by 10MinuteStockTrader.com, where we cover finance, stocks, options, entrepreneurship, education, and money. And here's your host, voted one of the top 100 people in finance, Christopher Ewell. On today's episode, we're going to stop talking about how to trade and show you exactly how we do trade inside the 10-minute trading room. So be sure to stay to the end so I can show you exactly how to get that $5,488 worth of trading education for free. Let's get into it. I'm going to show you every single trade that we put on over the last couple of weeks and how we traded them. And hopefully you'll find a ton of value with this. So here's everything we've traded inside the 10-minute trading room. Markets are people. People are predictable. Outlier can show you how to track market fear and greed with artificial intelligence on over 1,300 of the largest market cap names. Visit outlier.com to learn more. That's OVTLYR.com. They have a free pilot program for the rest of 2021 so you can get access to right now at OVTLYR.com. That's OVTLYR.com.
Well, hey there, traders. Welcome back to the 10-minute trading room. I appreciate you taking the time to meet with us today on this short and abbreviated holiday week. I hope you have a whole heap and helping full of plans for Thanksgiving. Even though we all got to deal with this inflation thing on the horizon, I'm hoping that you got something up your sleeves to make it no big deal. Hey, if you are here, do me a favor in the chat, let me know. I would love to get a second to chat with you as well. The scanner's just finished running. That was what I was waiting on right here. We're going to click save. We're going to share my screen. We'll talk about everything we talk about on a regular weekday. Two things to note. We will be out on Thursday on Thanksgiving, so there won't be any trading on that day. Friday, it is a half day of the market. We'll be trading earlier on in the day. But I've already sent you the link for that in the email today. And of course, I will email you when we go live as well. Now, I got a few things to talk about here. First off, let's look at our market analysis. Okay, first things first, we continue to see the S&P 500 over the 10-day and the 20-day. So the blue line is crossed over the black line. That's how I always refer to it. And the price is above the 50-day, which is the red line. So those are my bullish posture indicators. Additionally, the MMFI, it caught a bounce. I mean, look at that thing. It was right there knocking on 50. And if you remember, we keep it above 50. That is our long signal. If we don't have MMFI, the percent of stocks above the 50-day average, above 50%, we don't play. So yeah, it cut a nice bounce, which is good. And finally, our artificial intelligence data from FinClub came in today green light. So because of that, we do have a confluence of signals saying, hey, you know what? Today is an offensive day. Remember, we have offensive and defensive days. Today is an offensive day, which is exciting. Now, a couple things before we get too deep. I did make a move a couple minutes ago. I went ahead and I got out of PG and I got out of Under Armour. I'll send you those details, but if you're following those trades as well, now might be a great time to get out. I will tell you exactly why I got out of those before we even started today. First off, when we trade, we do not need to see 4.5% down days, right? That's an unexpected return. Let's go to our 5-day moving average. Also did a lot of back testing work over the weekend, which I'm going to talk about. So we were following the 5-day, which isn't even going to show because it closed below there apparently. Let me see if I can do one other try. See if this will plot it out forward. Yeah, okay. As you can see, it actually is within the back test, like the moving average cloud of that back test, which is interesting. But It broke down hard, and we keep our wrist tight, as you know. We were following the 5-day. It's below the 5-day. We took about $1 in risk on this trade. You know what? Sometimes that happens. So we are out of Under Armour. Now, PG actually is doing really well. It's following the 10-day moving average that we initially put on. What? Oh, I was using my short instead of the long. That makes a difference. Okay. So it was following it, underperforming a little bit, but at the same time, still doing what it needed to do. I went ahead and I took this off because over the weekend, I did mega back testing. I'm talking thousands of back tests I ran. And I was like, we need to make some changes in here. First change we need to make is when we're running our scanner, we need to actually put in all of our bullish criteria, right? Everything in the checkbox down here, we need to put that in on our daily scanners and for our back test. We're not trying to overfit our back test. We're trying to make sure that our parameters that we look at are valid no matter what. Here is one of the reasons I made these changes is because running just the back test on the 10-day, only the 10-day above and below, yielded a 9.10% return on PG. However, once we stacked in all of our other things, like, oh, wrong button, sorry. Stacked in all of our other criterias, like the price being over the 50-day, price being over the 200-day, the 3-day, price being over the 3-day, the 3-day being over the 10-day. All I'm doing is making sure that these are confirmed. When I put that all in place, we went from +9 to a -6. And I was like, I'm not holding this anymore. I've just invalidated my back test. I got to get out. So I did. And that's sometimes the way trading goes. Took it off for a winner. I mean, if you took it off now, you'd have even more of a winner. But I was like, hey, no, we can't do this. Additionally, I had the thought. So I was doing a lot of back testing, which led me to where we were. But my initial thought was, right now and historically, from the people I learned to trade from, they would let you know that the Keltner channel, the second Keltner channel, which is this green line here, that would be 2 average true ranges above the 20-day, above the green line. And using that gives you an idea of where something is overbought, where it's extended, and maybe you should wait for it to come back for a better setup. So I got to thinking, what if we try a 2, a 2.5, and a 3? So I use that as my entry parameter, right? If it's over the 10, but under the Keltner channel. In fact, let me do this. I'll clean it up. Today's going to go a little long because I'm doing some explaining, obviously. Let me clean this up. So if it's over the 10, take off drawings too. Over the 10, but below the second Keltner channel. So this that's the 20 days. So 2 average true ranges above there. So basically, enter if it's any time in here, no problem. Or enter when it's at 2.5, or enter when it's at 3. Let me add 3 onto here. And I was trying to get an idea of what really is backtested, what really is the point where it's too extended to enter. And what I found was the 2, was the second Keltner channel really mathematically proved out to be the place where you would not want to enter greater than. And I felt really validated because I've been using that for a whole long while. And I never even thought about backtesting that. But I also ran another backtest and I said, you know what? If we are putting it in, let's say at this point, what if we take our profits at the third Keltner channel? And I found some interesting results. So rather than just letting it run, pulling off the profits once it's achieved this point here, because getting this high up to the third Keltner channel, that's 3 standard deviations above, or 3 average true ranges above the 20 days. That's really extended. What if we could actually use that as like a profit taking exit? So we either follow the 10 when it comes back down as our profit point, or use the Keltner channel on top as our profit point. Running that, actually, so 10-day, actually, I'll tell you what, let's use somebody else because this is going to return negative results. Tesla actually is a great example. So if we run the 10-day, same entry point we talked about a minute ago, underneath the Keltner channel, above the 10-day, that returned 867. But if we used the exit target of that third Keltner channel, 164. Now, that's not better, so we would continue with the original plan, the trailing stop. But let's say something like Nike. If we went with the 10-day trailing stop, that would lead us a 10. But if we used either the 10-day trailing stop or the third Keltner profit target, that would yield us a 12. So what we're going to do going forward is we're going to run both of those back tests. We're going to say which one is better, because we're always going to use the 10 as the trailing stop behind us if it does go down. But if it achieves the third Keltner channel, we're going to go ahead and take our profits off at that point. I like that idea. And the back tests actually prove it may be better. We're going to run both scenarios. That way we can always choose the best one. So I hope you're excited about that, because I am, because I spent way too much time this weekend trying to mathematically prove this out. So yeah, I'm excited about that. With all that being said, let's talk about some new trade setups. Hey, do me a favor. If you are here in the chat, please let me know that you're here so I can say hi. I appreciate you doing that. All right, let's look first at EVRG. These are the ones that have passed our daily scans, and now we're going to look at our individual intraday scans and the back tests. EVRG comes in at 15, that's positive. MMC comes at 20, that's positive. PG, watch this. It's going to come in at, come on, -6. We're not going to trade that. Ooh, and Tesla. I'm excited. I want to trade some Tesla. I haven't traded Tesla in ages. Okay, so now let's start. Let me write these down real quick as ones we're going to EVRG, MMC, and Tesla. These are the ones we are looking at. So EVRG on the 10 is 15. On the 5 is 1575. Okay. If we use the targets, 11 and 10. Okay. So let's go back. It's either going to be the 10-day without the profit target, 1575 or 1514. I'd rather do the 5-day. Has just a slight bit higher return at 66. That's a fun number. I like that. Now let's go to MMC. MMC on the 5-day is going to be 15%. On the 10-day is going to be 20%. So we're going to run the 10-day. Now let's see if we're going to use a profit target with this. So 10-day is at 20% with the profit target gives us 17. We will run it without a profit target. 10. Open, long. I'm writing on my other screen here to keep up. 170, 73. We got a lot to do still. Tesla. Tesla on the 10-day without a profit target is 867. Ridiculous. And on the 5-day, it's 217. So we'll run the 10-day. Now remember, the 10-day was 816. If we added a profit target, or 867, that brings it down to 164. So all three of these we will use without the profit target. Okay, no problem. So now let's go to our portfolio here. And let's start pricing these guys out. So on my relative strength calculator, which is on the other side, basically it's just saying, how does this relate to the market, the S&P 500? MMC has the highest relative strength, so we're going to start there. We're going to look at the 10-day, remember? Let me make a note here, 10-day. 10-day EMA, no profit target. Okay. Let's keep track of that. Now, I actually messed up last week and started trading without following a few of my rules. And so I was like, you know what? The manual part of trading, which isn't much, I need to make sure I follow these. What's the best back-tested trend line? We've already figured that out. Does it cross the second and third buy points? The second and third buy points are one average true range above where we're at right now. So we're going to add from 170, 60. Come here. Next buy point is MMC. Yeah. 173.17 is our next buy point. I like the next ones to be blue. The one after that, come on, is 175.60. Okay, so if we can get those to cross, and I like my entry points to be green. If we can get those to cross, then we will add at those if it's set up completely. But yeah, we can see the best back-tested trend line does go higher than those. Now, is the contract that we're looking at over 250 in open interest? So let's go to MMC. Okay, no weeklies. Hang on. Sometimes you got to kind of move around to get days 2 works to update. Okay, both of these are greater than 250 contracts in open interest. And let's look at extrinsic value. Okay, but look at this. This is nearly $3 on 380. So we would not get that one. We need our open interest. Hang on, refresh that. I need our open interest to be less than 25%. So this one here, 143 divided by 730, 19.5%. I like that. All right, we're going to put this on here and let that, oh, it's on. We're in. Okay. 170.60, right on target. 170.60. All right, the next one that had the relative strength is higher is Tesla. Tesla may be weird. I don't know about that options chain. Let's take a look at it. Remove all annotations. We're going to do 10-day, no trailing stop. 10-day EMA, no trailing stop. I can tell you without a doubt, we're going to spread this one out because this one's going to be really big. We need to see. Oh, we're not going to be able to trade this. The average true range on this is, no, this is ridiculous. We would need to see the max risk per trade of $36 because the average true range is so huge per contract. No, we're not going to trade Tesla, unfortunately. EVRG. Unfortunately, no. In fact, you know what? I forgot to finish my questions here. Is contract more than 250? Yes. Extrinsic value less than 25%? Yes. Let's go back to, was it MMC? Are the strikes less than 50 cents wide? I swear that said $7 and $7.20 a minute ago. So I'm okay with that. It's a contract within the max risk. And my max risk on that one was $9.17 per contract. We got in at $6.60 per contract. Okay. Should be okay. I think so. But you know what? Sometimes things happen. I think we'll be okay. EVRG, we're going to do the 5-day. And I believe we said no profit target. Put on my notes here. 5-day EMA, no profit target. Okay. Perfect. So right now it's at 66.61. If we ran the 5-day, 15.75. Oh, it's not spitting out forward, but we can take a look at that. So 3.84% over the next few days. So 66 times 0.384 gives us $2.50 over 66 plus 66.61. All right. So our max buy point for the next 2 points is 67 and 68. And this goes to 69 based on this. So we should be fine. Let me go ahead and add those real quick so you know what I'm talking about. Buy point 1, buy point 2, and buy point 3. blue. And remember, these are one average true range above the current price. Okay, looking good. We know that this is going to go through. Let's go to our rules real quick. Does it, we know the best back-tested trend line. Does it exceed second and third buy points? Yes. Is the contract 250 plus an open interest? So let's go to, what's that, EVRG? Yeah. Open interest. No weeklies. We're going to skip it. 225. I mean, if it were liquid enough, I would be interested, but this is 80 cents wide. And yeah, that was the next question. Is it less than 50 cents wide? No. Is the contract within the max risk? Doesn't matter. When I make a trade, I go through and I think to myself, I need to find every reason I can to not buy this stock. If for some reason I cannot find a reason not to buy the stock, then the only thing I can do right now is to buy that stock. EVRG is not liquid enough for us to get into, so we're not gonna. MMC, like I said a minute ago, I may have messed up on that. Oh yeah, see, now it's 40 cents. Okay, I wasn't crazy. Stop calling me crazy. I knew I wasn't that far apart. Okay, it's 40 cents wide. My max is 50 cents wide, so no issues there. Okay, so the only trade we put on today was MMC, and we took off our PG and UA, both of which needed to be taken off. But yeah, these should be good to go. Okay, so that was our new trade setups, and let's do our final thoughts. And again, sorry for going long today. That was not intended, but there was a lot to talk about. Ever tried, ever failed, no matter. Try again, fail better. I think that's the best part of this, the fail better. When I first started trading, and maybe it was that way for you, you would try and you might win and then you fail. Try and you might win, then you fail. Try and you might win, then you fail. But every time, if you were realizing how and why you failed better every time. But if you weren't being observant, if you weren't keeping track, then I got nothing for you. Then you just continue to fail, doing the same thing over and over. Ever tried, ever failed, no matter. Try again, fail again, but fail better. So, yeah, today I figured we'd be getting a lot more busy, but we only have one trade on, MMC, and I will send you in the email all the details. Thank you so much for coming to the 10-minute trading room, where we take the guesswork out of trading.
Welcome to the 10-minute trading room, where we take the guesswork out of trading.
Hey there, traders. Did you see that new intro? Oh my gosh, I got goosebumps. That is so good. So, yeah, I have a full-time staff person that does all my graphic design and editing. And I was like, let's make a little intro to go after the live stream countdown for whenever we start. I also have an outro one too, so look forward to that. And yeah, she came through clutch on that today. Let me tell you. Well, hello, I am Bruce Wayne. You are in the 10-minute trading room. Glad to see you. If you're here live, do me a favor in the chat box. Let me know that you are here. I would love to say hi. We've had several new people joining in the last couple days as we start to get ramped up inside the 10-minute trading room, and I appreciate everybody who can jump on live. Now, of course, we will be talking about what's going on in the market, talking about what's going on in our portfolio, talking about some new trade ideas, and finally, our trading psychology, our final thoughts of the day. So let's do this. Let's first go into our market analysis. All right, so we're looking at the S&P 500 here. I honestly had thought the market had been trumping a little bit higher, but no, it's been moving sideways for most of November. And our results kind of speak to that, actually. If you look at our results, they're kind of just down slightly to sideways. I was listening to one of the market wizards. I just recently had him on the show. What is his name? Tom Basso. And he was saying, whenever you're looking at your results and you see, oh, you know what, you're down a little bit. Would you expect that in the market that's happening? And because we are trend traders and the trend has not actually been blowing up like I thought it was, it's actually been moving sideways. Yeah, this is not an unexpected result. And sometimes that happens, but that's part of the trading game, right? You're not going to get a winner every day. I wish we did. I wish that I could promise you that I am the YouTube guru you are looking for. That's going to give you a winning trading system every single day. But that's just not the case. We are very realistic here, and we know that, our win rate is right now about 51%. And our average win is much bigger than our average loss, which is leading to us to have pretty high returns. But this is part of the game. So with that said, looking at the market, kind of was breaking down earlier today, right? I checked in earlier today. I'm like, ooh, that's rough. We were down almost to the 20-day. But keep in mind, this is Thanksgiving week, and this is a very thinly traded week. Because of that, we are going to see more outsized move. It's like, Mark Minervini, he's one of my friends, and he trades low float small cap stocks because they can move faster. Right now, what you're going to be seeing is the entire market moving faster because there's less participants. Less participants means less overall liquidity. Less overall liquidity means faster moves to find either the buyer or the seller. So it's really important that you keep that in mind this week. Again, we will not be trading Thursday. Friday will be a half day in the market, so we're going to be on earlier, and probably will not be putting on much on that day either, because when we look at what's going on out there, the MMFI, which is one of our key indicators here to tell us to be a long or short, just broke through the 50-day. Yesterday, it bounced and then collapsed. And what this is telling us is that we may be starting to set up for short opportunities. This is point one. Point two would need to see the blue line under the black line, so the 10-day under the 20-day, and price under the 50-day. So we got a long way before we're ready to start shorting, but that doesn't mean it can't happen quickly, right? You go back to, when was this? September? Yeah, we were shorting here. Oh yeah, all that time we were shorting and doing fine. So that may be setting up here soon. I don't know. I'm not going to predict anything. I'm just going to trade what the market gives us, and that is the way that real traders trade. We don't predict, we just react. Next, FinClub had a yellow day. Yellow day is not the green day we would look to go for going long. So we had a total mismatch of signals here. We had the S&P is still in its bullish trend, even though it's kind of starting to wane. FinClub, our artificial intelligence data, was yellow, so that's not a green light. And then finally, the MMFI is under 50 now. Hopefully, it won't be there for long, but we will sit this out as long as it takes. So that means that we will not be putting on any new trades today. So you can not worry about adding to anything. But we can take a look at what's in our portfolio. All right, so I'm going to get kind of deep on this one. So this is MMC. We put this on yesterday. We will be taking it off today, but I kind of want to explain the situation here. So let's go to the 12-minute. I like the 12-minute chart. It is easy to read for me. So we put this on around here. So 1-ish, 2-ish, before the end of the day, kind of breakdown on this stock. Unfortunately, right? If we had timed it 30 minutes later, we wouldn't have put on this trade. But you got to take what you're dealt and work with it. Remember, trading is 10% what happens to you and 90% how you react to it. All right. So we put this trade on before the market broke down at that point. And today we will be taking it off. Now, on here, we talked about having the 10-day moving average as our backstop with no profit target. So we're just going to let that run. But until I see the moving average line we're following above our entry point, basically meaning that we are practically guaranteed profits, we have to keep our risk tight. Our risk in this trade, when the moving average is below our entry point, is either yesterday's low, so a close below yesterday's low, which is 68.46. We're closing in on that now. Or 1/2 average true range from our entry point. I know, it's complicated. But the point is, that's why you're in the trading room, so I can do it for you. You don't have to see, or you don't have to worry about it. I can just tell you about it. I'm going to add in the average true range so you know what I'm talking about here. Now, the average true range, one average true range is when we add, right? So we're going to add at this point, add at this point, if it closes above there. But we keep half an average true range for our risk profile. And in fact, I didn't make this up. I got this from the Turtle Traders. I got 2 seconds here. Lifting the veil. As you know, I have a green screen behind me with all of my books. So inside of The Complete Turtle Trader by Michael Covell, recommended required reading, they talk about how when they put on a trade, they will stack, they will pyramid trades when the moving averages, or not moving average, the price is greater than one average true range from their entry point. They will also remove the trades like a stop loss, if you want to think of it that way. They will take a stop loss at half an average true range from their entry point. This is where we're at today. So the average true range today is at 2.45. So let's do the math. 2.45 divided by 2. So half of that is 1.22. Now our entry point was at 170.60. So we can just do this. 170.60 means 169.37 is where we need to see it at. It's at currently 168.47. When I was making my analysis and making my decisions a couple of minutes ago, it was below that point. So I'm going to go ahead and I'm going to keep my plan and I'm going to take it off. We're going to take a loser, and that's the way trading goes sometimes. No big deals. Remember, we have 4 outcomes that'll happen. 1, a big winner. 2, a small winner. 3, a break even. 4, a small loser. In this case, small loser. No big deal. In fact, let's go do that right now. So close the position. I'm still connected. So when this happens, when it doesn't get filled right away, I like to give it a second to simmer, right? I use Tastyworks. Bump that down, $10. Just let it simmer for a second. You know, if we had acted earlier on in the day, this is like $2 below the current price. So yeah, that would not be a cool spot. I tell you what, hang on, are we filled yet? Let me cancel this order. This is coming back to life. This is unexpected. All right. So we talked about a minute ago. It is above half our average true range. It is now above yesterday's low. Do we keep it or do we not keep it? My original plan was to take it off. But currently, like, both of those points are still on. If I could only see 15 minutes into the future, that would help me make this decision to see what happens at the end of the day. I'll tell you what, we're going to let this rest for a minute, see what happens. Let's go to our final thoughts, and then we'll come back to if we're going to close this or not. The reason I want to give this just a couple extra minutes is, you know, we put it on yesterday, and then a couple minutes later, it decided to break down. I want to see if that holds true or if we are going to go ahead and get out. Either way, I'm fine with the outcome either way. I just want to make sure that the market tells me what it wants to do. Our final thought of the day. One that would have the fruit must first climb the tree. Sounds like an Asian, like Chinese proverb, right? One that would have the fruit must climb the tree. So when I read this, my first thought was, if you want to achieve the destination, you must first go on the journey. That makes sense. If you ever watch the movie The Secret, Jack Canfield, who I have one of his books, in fact, talks about how you could drive from LA to New York at night, but you can only see as far as the headlights, right? You've got your map, but you can only take it one step at a time. One that would have the fruit must first climb the tree. So if you want the outcome of being successful, the only way to do it is taking it step by step by step every day. So speaking of taking it step by step, let's go back to MMC. All right. We're up to 61.68. We're going to have to leave it on. That's our trading rules. I have to follow the rules. If I don't follow the rules, then I'm not trading in my plan. All right. So remember, we were looking at either below the low of yesterday or half one average true range from our entry point. And that was 2.45 divided by 2 minus 170, 60, 169.37. Both of those cases are still the same. I have to keep it on. That's one thing you're going to learn as a trader, is that if you have these rules, you must stick to these rules. We're going to keep it on. Good thing I didn't get filled right away, right? Either way. Okay, we're good. You know what? Thank you for joining me in today's 10-minute trading room. Like I said, we will not be putting on any trades. We are not going to be taking off any trades. And we are going to need to see the MMFI come back to life if we are going to be trading this long again. But I do have a plan, because I want to make sure that you feel like you're getting the greatest experience possible. Is that if the MMFI comes through and I'm not trading, that doesn't mean that you shouldn't. And I can still give you some ideas, some trades that would fit our trade criteria if the MMFI were still positive. But listen, I'm not going to break my trading rules, but I will give you some ideas, and maybe you can take those and run with them. So yeah, hey, check this out. We're about to run our new 10-minute trading room outro. So thank you for coming today, and check this out.
Welcome to the 10-minute trading room, where we take the guesswork out of trading.
Oh my gosh, that intro is so epic. I can't believe how awesome that is. How are you doing out there, traders? I appreciate you coming back to today's episode of the 10-minute trading room on this short week. Today is Wednesday. Tomorrow is Thanksgiving. Friday, we will be trading, but early. I believe I have it scheduled for, give me 2 seconds here, I'll double check. Scheduled for Friday, and I believe it is at 11:15 Central Time. Let me double check. Yeah, 11:15 Central Time. That's what I got it scheduled for. So hopefully you can join us Friday for that short day. Thanks for coming back today. I tell you, last night I put a picture on social media. Let me find it real quick. I don't know if you're like this, but when I go to Costco, we just want to pick up some paper towels. And $306 later, we had our paper towels and all kinds of everything else. Oh, hang on. I'm not showing it. There we go. $306 later, we had our paper towels and basically everything else in the store. So yeah, don't go holiday shopping right before then, when you have a lot of stuff to pick up, because yeah, that was definitely unintentional. But there was one other thing on Twitter I wanted to tell you about, and I found this super, super, super interesting, right? So Charlie Belibo has, or Billy Bellio has a great account. I like to follow it, but he also has a lot of really, really useful information. Check this out. The stock pickers bear market, right? So you wouldn't think PayPal is down 37% or Twitter's down 37% from their highs, or let's see, one of these, Clover Health. That was a big one earlier on in the year in the SPAC bubble, down 74%. And the list goes on and on. Alibaba, Baidu, like these were not little companies. So yeah, there's a lot of damage out there under the surface that I don't think many people are talking about. But let's first go to our market analysis and talk about that. Okay, so I did try and make this a little bit simpler. So, I like to talk about how the blue line over the black line, that's the 10-day or the 20-day, and then price over the 50-day. So what I did through here is I adjusted this green shadow, so it's so much easier to look just at a glance if it is bullish or bearish. Continues to be bullish. Interestingly, we are basically at the same point we were at the beginning of November today. Now, there's been a lot of volatility this week, and we talked about that earlier on. Can be expected when you have a lot less market participants on a holiday week. So, with that said, I do think that right now we got to be playing it cautious, right? We got to play defensive, because when we look at our other market indicators here, the MMFI, percent of stocks above their 50-day, is still down at 48%. So that means half of the S&P 500 is in a bear market. That's not exciting. That's not reassuring, right? And then, I mean, we gave up a lot of room here too. Then the FinClub, our artificial intelligence data, shows again another red day. And I was talking to somebody who just got FinClub, and they were saying how there's been a bunch of red days. And FinClub is designed to, when the market is going up like this, it's designed to catch these little moves in between here and there, right? It's not designed to catch the whole move up, but it's designed to catch those peaks where things are kind of rounding to the top and look really strong in a short-term time frame. That's what it's built for. But we use that as our green light. Back in our model portfolio here, we do not have a confluence of signals to go long. In fact, we are 2/3 of the way to going short. Not that I want that to happen. I don't want the market to go down. But if it does, we'll be ready. Don't you worry about that. So let's get into our portfolio review. Okay, we have one trade on. And if you remember yesterday, I was a little bit conflicted by this one because earlier on in the day, I checked it and it had reached below our exit points. Not only was it below the prior day's low, but it was also below half one average true range from our entry point. But by the time I was on air talking to you guys, it actually had reversed back. And if you remember yesterday, what I said is I have to leave this on. I have tools. And when you become a trader and you set you must follow them in stone. Otherwise, you invalidate your model. So I had to leave it on. And because I had to leave it on, we actually have a favorable result today. We're looking like it might get back to break even here the next day or two. So I'm not stressing on it. I mean, you make a plan, you follow that plan, and if it doesn't work, you just got to adjust. Remember, trading is 10% what happens in the market. The other 90% is how you react to it. And by having a plan, you know exactly how you're going to react. It makes it so much easier. Jocko Willinik's book, I have it on my bookshelf behind me. I have all the books out there, right? Is discipline equals freedom is his big quote. And that's exactly what we did yesterday, right? Having the discipline to follow our plan allowed us to not have to think about it. I mean, we had to talk through it, but the choice was made for us. And it was that we have to follow this plan and it will stay on because this is our back-tested, proven plan. And it's working out. And if it had gone down, it would have got out today. And that's just how trading goes. You have to be flexible. You can't sit on a trade and think it's just this is the one. You YOLO into a trade, you're going to be YOLOing out of being a trader. That's for sure. So yeah, this trade's down a smidge. I'm really not worried about it. It'll come back and we will take it off, or it'll rocket ship and it'll be great. I heard an interview with legendary trend trader Ed Sakota, and he was saying, someone asked him one time, what is your objective when you get in this trade? Well, my objective is for it to go to the moon. But in case it doesn't do that, I will have a trailing stop. And that's literally exactly how we trade. Okay. So with all of that being said, let's go to our final thoughts, because we're not going to be adding any trades and we're not going to be taking any off today. Easy day. All right. We're going to actually close down everything except for this. And then we're going to go over here. So I'm going to be on Benzinga here in about a half hour. I hope you can join me. That would be awesome if you could. I'd love to see you there and say hi. But today's final thought is I can only change my life. Only I can change my life. No one can do it for me. And that's exactly perfectly how trading goes. Only you can make these trades happen. No one else is going to do it for you. And you're only going to be able to do it one at a time. This is a long game here. And that's where people blow up, is that only you can make these choices, right? You're the only one clicking those buttons in the portfolio here. And only you can decide how much risk you're going to take and what plan you're going to follow. And you can change your life by doing this, both good and bad. But this is a game of 1,000 or 10,000 trades. This is not a game of a handful of trades. If you're expecting to get rich on a handful of trades, then just go ahead and email support at 10minutestocktrader.com. Say, I want to cancel, because there's no reason for you to think that you're going to get rich on a handful of trades, because it doesn't happen. You have to be in this for the long run. And you have to trade like you're planning to be here for the long run. And if you can do that and follow a strategy that keeps your risk tight and let your price run, you'll be good to go. One of my very favorite things I ever heard, it was from Larry Height, who I've entered, one of the market wizards. I cannot believe how fortunate I am to have learned trading from these guys. But basically, in a nutshell, I have it tacked up there on my vision board. It says, commit very little capital, take on very little risk, and still make a significant return. That's how that is like the cornerstone of how I trade. Commit very little capital, take on very little risk, and make a significant return. And I tell you, that is what we do every day inside the 10-minute trading room. I really appreciate you coming today. I hope you can join us at Binga at the top of the hour. I'm going to hit this video. Hopefully it works. If it doesn't, that's the end of today's stream. Thank you. I'll see you Friday or in the Benzinga stream here in just a minute.
Welcome to the 10-minute trading room, where we take the guesswork out of trading.
Good morning, traders. I got to tell you, I woke up this morning in a little bit of pain. I was hurting from Thanksgiving yesterday. I drank too much. I ate too much. And I rolled out of bed and I was like, oh, it doesn't feel so good today. Oh, I'm paying for all of my sins from yesterday's eating over the top for Thanksgiving. I hope you also ate over the top for Thanksgiving. I hope it was fantastic for you. You know what's not fantastic is the market. So, of course, there's new fear mongering going around about a new COVID strain, which at this point, I don't know if you feel this way, but I feel that is the go-to right now. Let's keep people afraid so that they can keep tuning into the news, so that we can keep lying to them, so that they can continue to have issues. I don't know if that's true. That's just my own personal opinion. Don't hate me for it, but I think you're probably as sick of this whole situation as I am. And now for them saying that there's more of it, great. Can't wait. Awesome. So anyways, let's take a look at the market, because it's reacting to this news and not in a positive way. So we're going to first look at our market analysis. All right, so I talked last week about how the market had been moving sideways, and earlier on in this week, how with there being less traders going on right now, you've got to find buyers and sellers, but you have to move farther to find those buyers and sellers. Anything like this is exacerbated because of that. So we're finding people to buy, we're finding people to sell, but we got to move the price a lot more to do that. Plus, combined with, South African health minister says it's necessary for governments to take precautions over new variants. Oh, geez, we don't have time for that. Ain't nobody got time for that. But the market still has the 10 over the 20, the blue line over the black line. Price is still over the 50. So this is currently still a bullish trending market. But 2 seconds here. If you want to look at the map of the wrong button, S&P 500, look at that sea of red. The only thing that's up is Netflix, because obviously people will be more Netflix and chilling, and Moderna, because people are going to need more of them shots. We got to have more vaccines out there, up 23%. Everything else moitered today. Add remove details. Okay. So all that being said is that we can do as much as we can, but sometimes the market will override what we're doing. So it's still in a bullish posture, but it's giving it up. The percent of stocks above their 50-day average got smashed, monkey hammered down to 33%. That's not good. We need to see that above 50% to go long. Additionally, FinClub continues to have another red day. So with that being said, I do think that we might be setting up for short trades here in the next week or so. But you got to take it easy. You cannot, at this point, we have different types of days. One day we have is an offensive day. Everything's lined up green. We have lots to choose from. Everything's good. Then there's another day that's a defensive day. Today is a defensive day because we're finding inconsistencies in our market outlook. And we have positions on that would be against this tide. Third, we would have a transitory day. That means, and that's probably what we're going to be looking at in the next few days, is a transitory day. And that's when we do not have long signals. We do not have short signals. We do not have a posture in either direction, but it is moving towards that. So we might be having a few transitory days because if we are moving to a bearish posture, like I said, we need to see price below the 50-day, but we also need to see the 10 below the 20 on that. Okay. And this is going to take a few days to work itself out. And it's very possible that we may have a situation where it's like this, where price comes and touches the 50-day and then bounces right back up. These would be transitory days right here that you wouldn't want to be moving in either direction until something gets figured out. Now, like I said, we're probably going to be looking at a couple transitory days in the next week while the market figures out which direction it's going to go. Because of that, we are not going to take a hard posture, and we're not going to be putting investments in long or short until the market tells us which way it wants to go. So you got to be super, super smart on that. So we have just the one position on. Let's go ahead and talk about that position real quick in our portfolio review. So as you know, the only position we have on right now is MMC. It is showing a loser, a little bit greater than our average loser. Earlier today, I jumped in and checked this, and it was down negative 55%. It's part of the game. But because we trade smart, this has actually come back like a huge amount. It was down over $2 worse than it is right now at the end of the trading day, because today is a short day. This is going to be the end of the trading day. We're going to go ahead and get out. Number one reason, it's below the 10-day. And that was our trailing stop. You remember earlier this week, it continued to show some strength. And right now, it's actually showing a lot of strength because the market's down 2%. And this stock is only down 1.78. So this relative strength is actually pretty high. But because we're going to follow our trading plan, we have to get out. Let's take a look at the back test on this just to show how well it did. From the moment we got into it, tracked in its back test flawlessly. But because of market conditions, which we can't control and we can't predict, this has fallen out of our back tested move. And so because of that, we have to keep our risk tight. You'll never hear me say, just let your risk run. No, we got to keep our risk tight. So we will pull this trade off, and then we will come to a very defensive posture. Because like I said, I think we're going to find several transitory days over the next days until we get a confirmation on which way this trend is going to go. So yeah, I'll take that off. I'll email you the details, and let's go to our final thoughts. So I really appreciate everybody on the live stream who is joining us on this short trading day right after Thanksgiving. Hope you're not too hungover. But let's go to our final thoughts. And that is, you can never quit. You can never quit. No, winners never quit and quitters never win. It's trite. I know it's cliche, but relating this to my experience, and maybe this has been your experience as well, you found some success and then you gave it up. You found some success and then it went away. You found some success and it started to grow, it started to compound. And I remember telling somebody on the podcast one time, I know it was like Mark Minervini or it was one of the market wizards. I know it for sure. I was saying, there was a point in time where I was like, I'm never going to give this up. I will figure this out until the day I die. There's never going to be a stopping point. And I hope for you that you have also made that sort of commitment, because it's going to take that sort of commitment in order to be successful in trading. I was just telling, I actually have a trading psychologist that I go to. I saw him Wednesday night before Thanksgiving, and we were talking, and I was like, this is for me, and I feel so fortunate that I was put on Earth to trade, because I could have been put on this earth to quilt, and could have been put on this earth to make sneakers. But no, I was put here to find the most lucrative career possible. And I cannot believe how fortunate I am because of that. And with that being said, you've got to have that level of commitment to say, you know what, this is what I was meant to do to be successful. But you are already on that path because you are part of the 10-minute trading room. You're a 10-minute stock trader like me, using everything at our disposal to totally upend the world of trading. So thank you so much for tuning into today. I will send you the trade details as we get out of MMC. And look at that, coming on back. Hang on, let's wait for just a second here. The 10 is at 67.83. It's still got a whole dollar to move. I don't think it's going to pull out that dollar here in the next hour. So as you know, have to follow the trading rules. It's coming through. But yeah, we need to keep our risk super tight. So we're going to go ahead and take this off. I'll send you all the details. And thank you for tuning into today's 10-minute trading room. I will see you back here on Monday. And then next Friday, we're going to have another live webinar training. So be sure to mark your calendars for that. I'm going to send out a million emails like I do to make sure nobody forgets. So have a fantastic weekend.
Welcome to the 10-minute trading room, where we take the guesswork out of trading.
Good afternoon, traders. I got to tell you, I love that intro so much. If you are here live, do me a favor in the chat. Let me know. Let me know your name and where you're from. That way I can say hi to you. I have a very special announcement. If you haven't already in the mail got it yet, you might see something very familiar when you open your mailbox in the next couple days. So this is a 10-minute stock trader exclusive shirt that is not available anywhere in the world except for members of the 10-minute trading room, like you. So I am super stoked about this. I got mine in the mail on Sunday. I haven't taken it off since. True story. So yes, let's get into today's trading. I got to tell you, remember, we have multiple different kinds of days. And I was explaining this to my family over the weekend. We have offensive days where we are actively making moves. We're putting trades on, making something happen. We have defensive days where we're not putting trades on, but we currently are in the market, right? So you're either in the market or you're out of the market. Defensive days is when we're in the market, either taking things off or making adjustments, if that is the case, or just not doing anything. And then we have transition days. Today is a transition day. I'll show you exactly why. Well, number one, we have nothing in the market, so we can't do any offense or defense. This is a transition day because I think we may be starting to look at bear market circumstances here. And I will gladly show you all the way through here. So on Friday, we had that really ugly, strong sell-off, right? This candle right here. But it was reminiscent of back in August. I looked at this earlier here. The issue with right now is that we're having a monster reversal, potentially dead cat bounce, back after this huge down day. Now, I guarantee you, there are people out in the universe who are like, oh my God, you bought the dip. This is going up forever. This is perfect. But you got to look under the surface. Give me a second here. Let me pull up the map. So this is the S&P 500 map. I like to look at this on occasion. And you'll see that all the movement is concentrated in tech stocks. You look out there, maybe a little oil, maybe a little real estate, but all the bright greens are in tech stocks, and they're up huge. And they make the biggest portion of the S&P 500, the market, right? The bigger this block here, the bigger their portion makes the movement. Which this is like, okay, no big deal. We'll just focus in on tech, right? But we got monkey hammered on Friday, right? And if you go look at the MMFI, the percent of stocks above their own 50-day moving average, it's down after today's huge 1.5% rally right now. Try and conceptualize what I just said here. There are less stocks in their own bull market today with this huge gap up than there were on Friday with that huge move down. There are less stocks today in a bullish market than there were yesterday or Friday when the market was lower. That tells me we have big time breakdown on the internals. Now, as you know, we have three components. This does happen on occasion when Google, so I source all my data from Google. Sometimes it's really slow to update and we get something like this. So we have the bullish trend still intact because we saw the blue line over the black line, the 10 over the 20-day EMAs, exponential moving averages, both, and price is over the 50-day moving average. So it is still a bullish trend intact. However, MMFI is below 50. You want to do a quick calculation here. We say 500 times 0.37. Only 185 of the S&P 500 stocks are bullish right now. So I know you're thinking to yourself, but Chris, let's focus in on those 185. Or how about this is a giant red flag that says if not even half of the market is bullish, we don't need to be trading this. We wait until the very best possible entries possible. But even then, things can break down. We have to be smart about this. And right now is not the time to be adding to any positions. FinClub had a green day, and it did pass a couple, but it only passed 2. And remember, this is where we get our artificial intelligence data from. Even FinClub's data is showing, out of a scale of 100, the market is looking hella bearish at 23% on the strength. Yeah, I have my reservations about this. So with that said, we have no trades on, and I'm not looking to add trades today. However, just because I like you, I will run the market scanner, our AI bullish power scanner, on the S&P 500. We'll have a chat real quick about what we see. Bullish power scanner. This is going to update real quick. Of 500 stocks in the S&P 500, 40 show to be in a position that we would add to. So keep in mind, we have multiple things here, right? We got to look top down. Is the market bullish for us? Is the market set up to help us, right? A rising tide lifts all ships. Is the tide rising or is the tide falling? The tide is falling. We see that in price and we see that in breadth. Now, there's no reason to be adding any long positions right now. In fact, I would not be surprised if we put on short positions before we put on our next long position. But still, we got to wait for the short positions to set up too. This is that transition period that I was talking about. There's no set place on where we're going. We just have to be agile and nimble and ready to take advantage when the opportunity comes, because we don't day trade. We position trade. So with that said, let's take a look at a few of these. Let's do strategy tests. Strategy tests. That's the one I'm looking for. We're just going to look at our 10-day. Now, the 10-day, all of this criteria is the same as our bullish power scanner. Negative 10% expected move on that. So this one looks okay. PGR. HAS, negative 39%. Ooh. And look how perfectly that tracked in its back test. Bro. 48%. But like I said, I'm not looking to add anything. But I did want to show you that there are some opportunities out there. If you are willing to take on that risk, there are a few opportunities out there that might be interesting to you. CME, negative 20%. No. 0%. No. Fast and all. 29%. Here's a great example, right? Followed its back test beautifully. But now that the market's given some weakness, look how it's just fallen out of its back test. So yeah. All right, moral of the story, we're not putting on any trades. You know exactly why we're not putting on any trades, because we are being smart with our capital. And you have to be smart if you want to be successful in this game. So we have covered our market analysis. Let's go to our final thoughts. Final thoughts of the day. I've said this before and I'll say it again, and you'll probably see me say it again in the future. Life and trading is 10% what happens to you and 90% how you react to it. Look, the market sold off Friday. That's the 10% that happened to us. Today, it's bouncing back hard. That's the 10% that happens to us. 90% is how we react to it. If we jump in on this dead cat bounce and lose money, that was not the right reaction. If we wait and let the market tell us where it wants to go, that is how we will be successful. Look at this. Hang on. I'm going to draw a straight line. Nothing but a straight line. We've been unchanged in the market for a month now, since November 4th. December 4th will happen this week. Yeah. The market is not telling us that it's bullish. So don't be sucked into this. I don't want you to lose any kind of capital falling for a move like this. We need to see a much stronger market than we have right now. And we need to see a lot more participants in that market than we have right now. So, hey, I hope that this was useful to you. You know, I really appreciate the fact that you came and joined us inside the 10-minute trading room. Be sure to come back tomorrow. I've sent you the links for that. Friday, we will be having a new webinar. Give me 2 seconds here. I want to pull up the webinar page for you. Webinar.10minutestocktrader.com. Should go to it. Yes. All right, so this is going to come out on Friday. I'd love to see you join me when we do this. This will be at 9 a.m. Eastern. Yeah. How this once struggling trader beat fake gurus at their own game and made a killing with stock opportunity analysis in less than 10 minutes a day. Sounds like what we do, doesn't it? Boy, I can't wait for it. I hope to see you on Friday. Thank you so much for coming to today's trading room, and I'll see you tomorrow.
Welcome to the 10-minute trading room, where we take the guesswork out of trading.
Hey there, traders. I got to tell you, I actually messed up. I'm not even playing. I just did the entire episode on tomorrow's studio setup link. So if you go to your email, I've already sent you the link to tomorrow's email on accident. So that means I will be setting up a new link. And then, of course, I'll text it to you. So we'll be good to go. Hey, by the way, if you are here, because I actually see people are here on this one. I was wondering why nobody came to the last one. I was like, oh, no, I think I messed up. Yeah, I did. But sorry about that. So, yeah, check your email. That will have the actual video. I will, since we're here, go over a couple things. But I would definitely recommend you go and check out the email. That'll have the full analysis. And in the process, check out this shirt. If you have got one, please let me know. Send me a picture with it. I want to share it as far and wide as possible because these are just for members of the 10-minute trading room. So if you haven't got your shirt yet, it is in the mail. If you have, please send me a picture. Tag me on social media or send it to our support team. Or you can send it directly to me. Either way, thank you for coming to today's trading room. I appreciate you being here. Again, apologies for sending the wrong link out, but in your email, you will find it. I'll take care of it for tomorrow. No stress. So Like I said, I'll do a quick overview of what's going on. We did not put on any trades. My full analysis will be in that link in your email. But since we're here, I do want to go ahead and tell you about it. Right now, the market is looking so bunk, I can't even believe it. We just had this huge sell-off last Friday, and today, this giant 1.5% rise back almost to break even. But the point I was trying to make with this line right here is it's been a month that it's going sideways and nothing has happened. And if you look at the MMFI, this is the part where I was like, oh, we got issues. Under the surface, we're up 1.5% today. We're down a number of stocks above their 50-day moving average. This is not private secret information. This is publicly available. Anybody can look this up. We're down. So 37% of the S&P 500 is in a bullish market. That's it. 1 in every 3 stocks is bullish. It's worse than it was on Friday when the market got monkey hammered. So yeah, that makes no sense whatsoever. Remember, on our market indicators, we need to have all 3 lit up green in order to go long. I think we may be looking for a short entry in the near future. FinClub was green today. They only passed 2. The market, though, if you look at this, all of this move is confined to a handful of stocks. There's a little bit of green, a little bit of red everywhere, but this move today that's happening is 6 or 8 stocks. That's it. Look at this. Look at this. Look at this. Hang on. This is 1 day. You ready? This is 1 week. Does that scream bull market to you? No. Yeah, so like be extra super careful when you're trading out there. So we covered MMFI, we covered FinClub. I did go ahead and run the Bullish Power Scanner for you. And I did it on the last video. That's in your email. But I'll go ahead and I'll do it here. So you can see what is available out there. Oh, PG. This was one we took off the other day. Yeah, we took it off and it's still just bouncing around. Not doing much. But let's do this. Strategy tester. So this is the criteria from our AI chart power scanner. That's all it is. And we are trying to see what the backtester results show on what is available today. There's 500 stocks in the S&P 500. That's why it's called that. 37 meet our entry criteria. That's not very many. And then, we backtest and everything on top of that. But ES has a return of 2.84. AEE shows a return of negative 14%. LNT, negative 10%. DPZ, Domino's Pizza? Yeah, 18%. Look how beautifully it's following its back test. Look at that. That's gorgeous. Bro, 48%. Again, look, it's following beautifully in its back test. So there are some opportunities out there, but I'm not trading them. And I'm not trading them because the market does not have the strength behind it. A rising tide lifts all ships. But if all the ships have left the harbor, then there's nothing to rise the tide with. I kind of just made that up. So yeah, this is not doing great. I don't think the market has enough with it. Today, basically, you got a bonus episode because I went over all this twice. But since you're here, let's do our final thoughts, and that's life is 10% what happens to you and 90% how you react to it. Hey, 10% of the time, well, hopefully not 10% of the time, but sometimes I mess up, send the wrong link out, do all of this analysis, but it's 90% of how you react to it. Just like in trading, if the market's doing its thing, what you need to do is be smart and know exactly what you're going to do based on whatever the conditions are out in the marketplace. So, hey, thanks for coming. Enjoy the bonus episode, and I will see you tomorrow.
Welcome to the 10-minute trading room, where we take the guesswork out of trading. Hey there, traders. Good afternoon.
How are you doing? I appreciate you coming to today's 10-minute trading room. I got to tell you, I have a big smile on my face. I have a big, 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 giant smile on my face, mainly because I feel like I don't want to say I told you so because I like you guys, but I kind of told everybody else in the world out there, don't get suckered into this move yesterday because we just unwound it in a brutal way. And yeah, it's an ugly day out there. But because you are in the 10-minute trading room, you knew ahead of time how to react. I wish, oh my gosh, I wish that I had somebody that I could lean on like you're able to do trading with me. And boy, am I grateful that you're here. Exceptionally, exceptionally grateful. So grateful, in fact, that I wore my shirt again today. I got to get it in the laundry, but I am just so thrilled to have it. If you haven't got yours yet, just know it's coming in the mail. I can't wait for you to put it on. Tag me on social media when you get it. So let's do this. Let's first go into today's market analysis. That looks like it hurt. Not us, though, because you were ready. You were listening to me. You had gone all to cash. And yeah, another big, ugly red candle. So here's what's up. The market is breaking down, as we talked about the last 2 days. And I said, do not jump into this rally yesterday where it went up. I mean, it felt like it went up infinity yesterday to me. And I'm sitting here over on the sideline, and maybe you were too, like, this doesn't feel right. But now, another big, ugly red candle. I mean, in all reality, we could be looking at a situation like this where it goes down and we continue to see a bearish environment. We could be looking at a situation like this where it comes down, touches the 50-day, and it's back off to the races. I don't know. I'm not going to predict it. But I am saying that right now we have issues. If we look beyond just the price, so the 10-day exponential moving average is still above the 20-day, but it's real close. There's a good chance that tomorrow, if we see a down day, price will not only be below the 50-day, but we may have this crossover here. If we do, we are starting to go short. I told you this on yesterday's stream. I think we are more likely to have a short position on before our next long position on. And that's okay, because that's part of the game, is playing both sides of the fence. But you have to pay attention to what the market is telling you. Now, internally, 27% of all the stocks in the S&P 500 are above their 50-day moving average. Look at this ugly line. Oh my gosh. There's nothing in the last year that is that ugly. We'll probably be making new lows on this value. The current low was at 23.84 was the lowest over the last year. So yeah, I think we are just getting started. In fact, let's take a look at the S&P 500 map. This doesn't play into my this doesn't play into my decision analysis, but oh gosh. So yeah, the market is not the market is super unhealthy, but yet we're knocking at all-time highs. How far are we from an all-time high? Like 2%? Yeah, this is not a healthy market whatsoever. Fin Club also said today is not a healthy market whatsoever. I see a few people are here live. I appreciate you being here. If you are here, do me a favor, over in the chat box, just say, hey, just let me know you're here. I would love to say hi. I appreciate you coming live. I know a lot of people can't make this live, but since you're here, please come and say hi. I'd love to say hi back. Fin Club, our artificial intelligence data continues to show a red day. So what we need to see to get short will be the opposite of what we need to see to get long. This still shows bullish. I know you're like, but Chris, how could it be bullish? Well, it's because we don't have this crossover yet, and price is still above the 50-day. We do have the Redfin Club, and this was 28, so still 28 and 27 and change now. So there's three kinds of days. I want you to remember. We have offensive days where we want to be in the market. We want to be making trades. We have defensive days. That's when we're in the market, but we're not adding any trades. And we're trying to make sure that we balance our risk and keep that as tight as possible. And then we have the third kind of day, which is the transition day, which is what is going on right now. We're not in the market and we don't have any skin in the game right now because we're waiting. We need to let the market tell us where it's going to go. And then we'll play. Right now, we don't have a confirmed signal to go down. So yeah, that is our market analysis. And I don't have any portfolio review to show you today. Nor do I have any new trade setups, but I do want options out there if you're interested in playing this. All right, so I am running our bearish power scanner, and the names that will pop out of this, got a few, 40, but only 44 charts of the S&P 500. It's probably because a lot of them are showing oversold at this point. But trust me, there is no point where you could say something is or isn't oversold whenever it has its way down. All right, so we're going to look at Facebook first. Who would have thought Facebook would be on this list, right? And we're going to go short under the 10-day. Negative 38%. So even if you were to go short on this, it's not a super great setup. Because still would, and this is the one thing about going short is that you need to compress your time frame for the short entries because there's a lot more volatility that's going to happen. Because we're only going to backtest over last year. We don't need as much data. We just need to know right now, is this strategy working? Facebook, no. That doesn't mean it can't for something else. So GLW, we would not put on. K, we would not put on. BTR, we would not put on. IFF, we would not put on. EBCT, we would not put on. Does that mean we won't have any short trades? No, but we will follow the data. We will make our very best entries that we can, and we will use these backtested results for us. And if we come across one that backtests poorly, even though the market's set up to go down, and like this one, right? You would think that this is a great setup, but over the course of last year, no matter what, it shows negative return, and you can't fight that. You can't fight the math on that. So there are no trades today, like I said, because we don't have a confirmed market direction. We've got to have the market direction first. So let's go finally to our final thoughts. Could I have found a more appropriate final thought for today? I'm not sure. Every exit is an entry somewhere else. Well, daggum, isn't that true? Every exit that all these people are taking out right here is an entry for something else. And it might be for us here in the next couple of minutes or next couple of days, not today. Every exit is an entry somewhere else. And keep in mind, right? There's so much that goes into trading that psychology. Any monkey can click buy, any monkey can click sell, but you have to be smart. You have to understand how it works. Full disclosure, I actually have like a vision board right over there and on the other side of my computer. And on there, I have a paper tacked up and has my face on it, kind of like a quote card, and it says, trading is easy. And I don't do that because I think I'm smarter than the market. In fact, I even wrote underneath it, I said, I'm not smarter than the market. I just understand how it works. And when you understand how it works, you have a lot of confidence because you understand how to play the game. You know, even when you're 7 years old on your Nintendo that you got for Christmas, you didn't know how to play Mario at one point. And then you figured out how to play Mario. And then you got a lot of confidence because you knew how to take out Bowser. You knew how to take out all those little Goombas and turtles and everything else. Once you understand how the market works, trading is easy. It's very, very true. And it's all about having the confidence to enact your plan. And that is our plan for today. We are not going to be adding anything, but we will be defensive and waiting for our next setup to come through. So thank you for joining me on today's live stream. I really appreciate you coming by. Do me a favor, share this out with people if you feel it was useful. This is private members only, but if you feel that somebody else could use the information from it, go ahead. It's not going to hurt us because there's plenty of people out there who are kind of panicking right now. Hang on, there's plenty of people who are panicking right now, seeing this kind of stuff. So if you found that useful at all, just send it over to them. Let them know. And again, thanks for coming to today's 10-minute trading room. I will see you here tomorrow.
Welcome to the 10-minute trading room, where we take the guesswork out of trading.
Good afternoon, traders. How are you? Thank you for coming to today's trading room. I've been working on the new webinar that's coming out on Friday. And so I'm making my notes, getting all ready for it. And one of the key things in a webinar is you have to really convey the point of the webinar. What's the big domino that if I can get you to understand that domino, you will understand the entire concept of the webinar. And I wrote this down. The big domino is the only way to trade in today's markets is by trading 10-minute trading. Still kind of refining that. But I was like, this is so true. And like, the more I do this and the more I teach and the more that I have the trading room and the more that I trade, the more I realize that there is no other way. This is the way to trade. If anyone, I actually was in the shower and I was thinking about this earlier. I was like, if anyone was ever successful in trading, it was because they happened onto the 10-minute trading way that we discovered. And that is not a plug whatsoever. It's the fact that I feel this in my core, in my soul, and you should too. And that's why you're here. Because there's days like today and the last week or so when we're out and there are people like panicking. And it's like the opposite here. I don't know if you've picked up on this, but I don't look at news at all. I look at price because that's what pays. If you're trying to trade the news, you're going to lose money, period. So let's do this. Let's go into our market analysis. I'll explain more. And I apologize for the quality of yesterday's stream. I'm hoping that I have fixed that so that won't be an issue in the future. Okay, so looking at the market, it was up. It felt like infinity today. I think it was up close to 2% at one point. Now it's down and going down. And lo and behold, remember what our 3 criterias are for going short. Our first criteria is seeing the 10-day, which is the blue line, under the 20-day. I'll make sure I took my fingers down the right order so I'm not offensive. Price has to be below the 50-day. MMFI has to be under 50. And we need to see a red Fin Club day. And we don't have all that. But I bet you we do tomorrow. Because as I talked about yesterday on this show, I think if we have another down day, we're going to be set up to go short. The market is down 18 basis points. It's not much, but that's all it's taken. And now I bet you we are going to have a flood of sellers come to the market. I mean, the market's up like 24 something percent this year. We got room for it to go down and still be just fine. Look at the percent of stocks that are above their own 50-day. This should have told you that the market is sick, completely, utterly sick. And going back to the S&P 500 map, so this is today, somewhat mixed across the board, which is why the market's only down 20 basis points, somewhat mixed. Look in the last week. Bloody ocean all over the place. Now, this doesn't factor into my trading, but it is useful to know. So yeah, we're not putting anything on, especially long. There's a very good chance that potentially tomorrow, what was tomorrow? Thursday? We may start our short escapades, our short capades. Because that's how it is when you start using 10-minute trading. When you do 10-minute trading, and I'm trying to find a catchier name for it. And if you have one, let me know. Hey, if you're here, by the way, please say hi in the chat. I'd love to say hi back. I got to come up with catchier name than 10-minute trading. I'm on to something, and I know the strategy is it. I need that crispness of the name to make it like really punch. So, anyways, we will not be adding any trades. We're not going to take anything off, so there is no portfolio review. There is no new trade setups. And on days like today, remember, we got 3 kinds of days. We have offensive days where we want to be in the market. We have defensive days when we are out or we are in the market and we're playing to make sure that we don't mess up the trades that we have on. And we have transition days. Today's another transition day. But I think tomorrow we might be an offensive day going short because this is looking good. It's looking juicy. Okay. So let's do this. Let's get straight to our final thoughts. I'll get you straight back to your day. Sam, how are you, sir? Thank you. I tell you, every day when I see people here watching live, I'm always like, somebody just say hi. That's all I want. I want to talk to somebody. I'm so lonely. I appreciate you doing that, Sam. That means the world to me. And for being part of this. And as you can tell, this is different than anything else. Because I really, like in my core, feel like if anybody's trading any other way right now, they're toast. But, one thing that my friend Steve Burns would say is like, what is the trend? He would say, well, what is your time frame? And that's super true right now. If you're not trading on like a crazy, crazy short time frame, then you're toast. Totally toast, right? I mean, in all reality, you could have traded this both directions, but that's not how we trade. We trade once a day at the end of the day. It's amateur hour in the first hour. The professionals and all the hedge funds and all the big money managers come to town at the end of the day. That's when we come to play. So you don't get suckered into a move like this morning. Honestly, this is like, it doesn't get better than this. Actually, I'm really excited about this. I haven't locked it down just yet, but I want to have some sort of trophy where when you get your 100% in your account by using 10-minute trading, that I will ship you out a trophy. I just came up with this morning, and then I found this really fun website where they have all kinds of different trophies, like hot dogs, coffee mugs, beer mugs, and they're like, any design you want, we could totally manufacture it. And I was like, it'd be a cool design on a trophy. One of these bad boys. I was like, that would be sweet. So whenever you get 100% in the year, I ship you out a trophy. You just gotta let me know, and you gotta be honest, because like anybody could make that up, but you gotta be honest. Anyway, details are still in process on that, and I hope to ship out hundreds of them. Because yeah, it's super possible. I mean, like, if you follow along, it's totally possible. But let's do this. Let's go to our final thoughts. Even if you fall on your face, you're still moving forward. Well, I can't tell you. If only beginning traders would understand that. You're going to fall on your face thousands of times if you're lucky. But the idea is that you have to learn and keep moving forward. Because usually what happens to traders, and I hope this isn't happening to you, is that they don't scale their positions correctly. I usually go 1% to 2% total. I talk about how much risk I'm willing to take on each trade. I'm scaling this to fit my portfolio. And I'm only looking to take 1% to 2% on any one trade. And if I am wrong, which happens, I still have 99% of my account left. If I'm wrong again, I still have 98% of my account left. But on the trades where we do win, we win big. And I might make up 2, 3, 5, 8, 10, 20% of the portfolio on one trade. I've seen it. I've done it. But that's the thing, is that even if you fall on your face, you're still moving forward. If you fall on your face and learn from it, you're in the right direction. If you fall on your face and you want to blame everybody else and blame the market and say that, this is all Chris's fault, or this is all the short sellers' fault, they're doing ladder attacks and all that crap that you hear on on social media and just no. You need to be responsible for your account because you're the only one clicking those buttons. I will guide you as best as I can possible, but I'm not making your trades. And if we lose on a trade, if we fall, you're still moving forward because you've learned something. You've adjusted. And hopefully, you'll learn from it enough so that you will survive. That's the key. In fact, part of my webinar on Friday, I'm going to write this down before I forget. I'm going to be talking about how trading is just like playing Mario. In fact, on my Twitter feed, if you go to my Twitter feed today, I kind of did a 3-part Twitter feed on that because I really think that this is that I'm onto something. This will be fun to talk about. Okay, that is it for today. I appreciate you coming. I appreciate the interaction. And if you aren't already planning on it, do me a favor, go watch us live on Benzinga. I'm trying to talk Money Mitch into let me be on for a whole hour today. Usually I just have a half-hour show. But yeah, if you are available to watch on Benzinga, come check it out. Please, in the chat, let me know that you're there so I can say hi. I appreciate it. And thank you guys for tuning into today's 10-minute trading room. I will see you back here tomorrow or hopefully on Benzinga. Talk soon.
Welcome to the 10-minute trading room, where we take the guesswork out of trading.
I'll tell you what. Welcome back to the 10-minute trading room. I was really disappointed today. Like super, super disappointed. I thought today was the day that we were going to be able to start going short. Hopefully I sent you guys the right link. I'm not seeing anybody here just yet. I'll give just another couple of minutes for people to come in the door. Oh, I forgot to hit the send button. Oh, that's my bad. Okay, I will wait here for just a couple minutes for people to arrive. By the way, I really appreciate you. It's really funny. So I have to go in, I have to set these alerts manually. Mainly, the number one reason I do it is to make sure that I am where I'm supposed to be. I'm at my desk. I'm at the computer. Everything's all fired up. I got all my tabs open that I need to talk about. And there was just that one last button that says send. You know what I mean? So yeah, I usually get that all ready about 5 minutes beforehand. But today, unfortunately, I didn't click the send button, but it's okay. I actually get the alerts on my phone as well. So once that rolls in, I will know that you have the alerts, and then I will get started. What day is today? Today is December 2nd. So we are almost to Christmas. Have you had a chance to buy your Christmas presents yet? I did. I tell you what, we were on top of that earlier this year. My wife was really smart. She started buying everything months ago on Amazon, Walmart, and just having it trickle in over the course of weeks, which was awesome. And so we are totally all the way ready for Christmas. Generally, we like to do the Black Friday shopping, but last year with COVID, we didn't do it. And this year, we're like, nah, I don't think we need to do it. We got everything we need right here. So yeah, still waiting on that text message to come through. I know that as soon as you get it, you're going to come over here. So I'm just going to be looking around, checking my stuff until I get those messages, because that lets me know that you also got your message. Oh, just got my message. Okay, so we'll go ahead and get started. I know people are going to come trickling in. That is my bad for not having sent it earlier. See, it's lighting up here on the screen. All good to go. Ready to get started. Okay, well, welcome to today's trading room. If you happen to catch the replay of this, definitely fast forward the first 4.5 minutes so that you don't have to waste any of your extra time today. I appreciate you joining us today. We will be covering what's going on in the market, what's going on in our portfolio. We're going to be having a member highlight today. I'm excited about that. And lastly, we'll be getting into our final thoughts of the day. So let's do this. Let's get straight into the market analysis and let's talk about what's out there. Well, I tell you, I was very disappointed this morning. I was ready. I was honestly, I was doing my scans and I'm like, oh, this is going to be a good afternoon. We're going to be getting short. This is going to be fun. And you know what it's doing right now? Price is back above the 50-day. Now remember, we cannot circumvent our plan. The way that we establish a bullish or bearish market is by the 10-day under the 20-day and price under the 50-day. We don't have that. We need that last component. I mean, we're close, 456, and it's 470 or 457 right now. I mean, it's so close. But we have to play very, very tight risk. Because in all reality, there's a very good chance that this could continue up tomorrow, or it might just go back down. But this is a transition day. Remember, we have 3 types of days. We have offensive days where we're looking to put on trades because the market lines up for us. Defensive days is when we're in the market, but we're not adding anything. Maybe we're taking things off. And finally, a transition day where we aren't doing anything but waiting on the market to tell us which way it wants to go. Today, another transition day. But that's okay. By the way, this red circle here is a preview for tomorrow's webinar. I'll give you another preview real quick. I have 3 areas that I'm going to be going down. The secret indicator that tells you what's really happening behind closed doors in the stock market. How to get a 90% discount on every stock that you buy. Warning, only do this if you like big profits and small losses. And finally, how to avoid every market crash every time. Ooh, that sounds like some hot fire. Looking forward to doing that. So that will be tomorrow morning, 9 a.m. Eastern time. If you can join me live, that would be awesome. I've already got 100, not 100. I think there are 5 emails between right now and tomorrow when it starts, reminding people to show up. Because I'm making these courses with the objective to answer your questions, right? I'm not just going to pontificate for an hour. I do that enough already. I want to interact with people and get your questions and your answers. And this is going to be cool, right? And the title for tomorrow's webinar, how this once struggling trader beat fake trading gurus at their own game and made a killing with stock opportunity analysis in less than 10 minutes a day. So after I published that, I was like, oh, I don't love stock opportunity analysis. I wish I had something else better there. But it is what it is right now. That's all right. So make sure you come to the webinar tomorrow so you can tag along and ask questions. Hey, if you are here, I see some people joined. Please be sure to say hi. We had Sam yesterday say hi, and I really appreciated that, Sam. And in fact, that kind of leads me into since we aren't putting on any trades, we don't have anything in our portfolio right now. We're being very defensive, very conservative. We want to make sure that while the trend is running, we run with it. But when the trend's trying to figure out which way it's going to go, we relax, we count our money, and we wait. But if we have another down day tomorrow, I mean, I don't know how mathematically we could not put a trade on tomorrow because it should be a down day. So let's go to our member highlight of the day. This guy right here sent me a picture of him wearing his hashtag 10-minute stock trader shirt, and I got so excited. You should have seen how big my face was because this is it's a new program. Obviously, we just started it in November. It's the early December right now. And one of my things was, you know what? I want when people come to the 10-minute trading room, I want them to wear the badge of honor. Nobody else in the world gets these, but you do because you're a member of the 10-minute trading room. And I am so stoked that Sam sent that over to us. Sam, thank you so much. You are featured for today's member highlight. Thank you so much, sir. And then Brian just came on. Brian, hey man, where you been? Thanks for saying hi. I appreciate it. Actually, I was getting ready for tomorrow's webinar, and I was rewatching last week's, kind of making notes, seeing where I could improve upon. And I saw that you were in the webinar as well, and I was like, oh man, that was awesome. I'm glad that you came from the webinar into the trading room, and I hope you can make tomorrow's webinar as well, because we're going to be covering some really, really awesome stuff. Thanks for coming today, Brian. Appreciate you. So the last bit, really, because we just don't have any trade setups right now. I want to have them. I want you to have them. But this market is not telling us which way it's going to go. We gotta be careful. Ooh, Brian's working on questions. Thank you. Here's the topics just one more time. The secret indicator that tells you what's really happening behind closed doors in the stock market. How to get 90% discount on every stock you buy, and warning, only do this if you like big profits and small losses. And finally, how to avoid every market crash every time. And it's math, so I can say that with confidence. I'm not worried about that. Cool, man. I appreciate you working on those questions. I cannot wait to talk about that tomorrow. So let's do our one last final bit of the day. My favorite time of the day. Final thoughts. Expect problems and eat them for breakfast. Ooh-wee. That's a good one right there. That's exactly what trading is. When I saw this, I was like, that's the one today. Boom. This one almost might be one of my favorites I've ever seen. This is why the majority of people fail in trading, is because they think 1 + 1 = 2. 2 + 2 = 4. 4 + 4 = 8. Wait a minute, I just lost my entire trading account. What just happened? I was talking to market wizard Tom Basso a couple weeks ago, and he and I had this conversation because I was like, a lot of engineers get into trading, but they also have a lot of difficulty because it's not like math. I mean, in a way, it's like math, right? It's numbers and moving and averages and whatnots, but it's not math in the fact that the answer is variable. Your inputs are fixed because your position size, your entry point, the number of shares you're trading, all that stuff. Your entries are all fixed, just like 1 + 1, but your output is variable. I mean, 1 + 1 could equal 0. You put on this trade, and then you lose the entire account because you didn't know how to size it. 1 + 1 could equal 0.99 because you sized it very correctly, and you lost, and no big deal. It happens. Or 1 + 1 could equal 2. Or 1 + 1 could equal 3.8. Or 1 + 1 could equal 10. And that is how a smart trader, understands how to trade in the market. You expect the problems, and then you eat them for breakfast because you know exactly what to do. So that was a really good one today. I'm excited. I'm probably going to bring that one out in the future again. That was a really hot tamale right there. So listen, thank you for coming to today's trading room. Again, market's not giving us which way it wants to go, but we're ready, and we're we're locked and loaded. We just need it to tell us, hey, we're going to go up, we're going to go down, but right now, going sideways, that's not going to work for us. We need a direction. So thank you for coming to today's 10-minute trading room. Be sure to come to tomorrow's early morning 9 a.m. Eastern time webinar. I will see you there, and please bring lots of questions and a notepad and paper, because I take this very seriously. That's education time. This is execution time. Two different things. So thank you for coming. We'll see you tomorrow.
Welcome to the 10-minute trading room, where we take the guesswork out of trading.
There we are. Hey traders. So I started this video 8 minutes ago, and I was like, when are my texts coming through? When are my texts coming through? I'm sitting here waiting on it to come to my phone. It took 10 minutes between the time I clicked send to the time I got to my phone. So I apologize for that. That means I need to start it earlier. So I've already made myself a note to start it earlier next week. By the way, thank you and happy Friday for coming to today's Trading Room Live. And if you are here, do me a favor in the chat box, let me know. I did had a really great time on the webinar this morning. I've just been watching it back this afternoon, making notes to see where I could improve upon. If you had a chance to come to the webinar, let me know that you came. I know a lot of people came. We had, I remember I saw Isaac there. I saw Donna there. I saw Brian there. I saw Ron there. And I saw Victor there. So good job, guys. That's a big deal. Being able to come to this live. Brian, you're here as well. Thank you, sir. I appreciate that. You had some really great questions this morning, Brian. And in fact, while I was watching the replay, I got to thinking more. You were asking more about the stock replacement strategy. And I think that's what I'll cover for the next webinar. It's really diving deeper into that strategy because you'd asked for more clarification. And unfortunately, on that type of webinar, I'm trying to get as much in within an hour as I can, or really more like 90 minutes because I talk too much. And I was like, oh, geez, I just ran out of time. So I appreciate that. Hey, I don't know what wash hands means. I don't think that that's what it means, but it comes through on the on the chat here as quote wash hands. I assume it's like a something like this or something. Yeah, you're welcome, man. I'm so glad you were able to make it. Let's do this. Let's talk about what's going on in the market. Then let's talk about our game plan because I'm coming up with a game plan right now. And it makes a lot of sense to me. And I think this is about what's going to happen. This is looking pretty juicy. Let me find the right button here. Here we are. You thought it was clapping hands. I agree. Apparently, the system thinks it's washing hands. I don't know. All good, my friend. Yeah, I don't know why the emojis don't come through like that. That's weird. Whatever. Let's go straight to the market. And let's talk about what we're seeing on here. This is good. This is what we wanted to be seeing all week. Now, keep in mind that early in the day, that's when amateurs come and they try and day trade. Late in the day is when the institutions come in. Early in the week, that's when amateurs come to play. Late in the week, that's when institutions make their late week plays. Some psychology around this. What I think is about to happen, especially considering that FinClub gave us his green light today. I think we're going to see a monster bounce on Monday, followed by the real down move on Tuesday. Now, we won't be trading short today because while we are set up on the market to be short, right? So price below the 50, the 10-day under the 20-day exponential moving average. We do have another big washout on the MMFI. And if you remember earlier on today in the webinar, that's so important, is to know the market breadth. But we had a green FinClub day. Usually when this happens, they're leading up to a move. And you can go back into the historical and you can see they're leading up to the move we've had this week where everything got failed, right? A lot of the days have been failing recently. But we couldn't go short until we had our price actually showing that. I think what's going to happen is Monday, we're going to have an extreme bounce. I don't mean like we're going to get back to even. I think we're going to have a monster bounce. One of those bounces where it feels like infinity, right? Something like this. In fact, I'm going to call my shot. I'll put a circle right there. I am saying we're going to get that. Now, we're not going to trade this because I could be wrong, and the trend is clearly down. But I think once we hit this, maybe Tuesday, maybe Wednesday will be the perfect day for our setup to go short and watch the market wash out. That's what I am expecting to happen. I'm not always right. I'm not claiming I'm always right. But I'm also saying that because if you look right here at this wick, hopefully you can see that. Zoom in just a little bit. We're already taking away some of this price move leading into Friday. Monday, a lot of people are going to come in and they're going to try and play this. They're going to say, oh, you got to buy the dip. Like I said, early in the week is amateurs, late in the week is institutions. Early in the day is amateurs, late in the day is institutions. That's what I'm going to see happen. That's what I'm going to call. I'm going to move this down a little bit. I don't think it's going to be that high, but somewhere in this range. And then Tuesday or Wednesday, that's when all hell's going to break loose, and that's where we're going to get in. I'm calling my shot. I could be wrong, but I'm calling my shot. All right, so that's our market analysis right now. Next, let's go to, we don't have any portfolio. We don't have any new trade setups, obviously. So I do want to do a quick member highlight. I really am proud of you guys for coming to today's trading room. That's a big deal. Being able to take the time out of your day and to come and learn, that meant a lot to me. And I am so glad that we were able to do that. Brian had a lot of excellent questions. I got a lot of excellent feedback, and I am super grateful for you guys coming. Over the next couple weeks or so, please shoot me an email, tag me on social, or something like that. Give me some ideas of content that you're looking for. But I am really confident in the next one, talking about more of the stock replacement strategy, because there's a lot to that, a lot to unpack, and I just kind of glanced over it. And learning that from Larry Height, the market wizard, and then Tom Basso also confirming what Larry had talked about. Tom Basso figured it out on his own. We got it easier because Larry taught it straight to us, so it was easier. But yeah, let's over the next few days, if you don't mind, just reach out to me. Let me know what you're interested in learning, and let's start building that calendar, because it's not for me. I'm building this for you. I'm building this for our community so that as we go through, you can always go back to these lessons and just learn a ton. So yeah, absolutely. Please do that. So let's do this. We're coming into our final thoughts on Friday. Quality is not an act. It's a habit. I've heard it rephrased as success is not an act, it's a habit. I couldn't agree more, right? Success in any venture, whether it's entrepreneurship, whether it's trading, whether it's being a parent, whether it's, being the best Mario game player, right? It doesn't happen just once. It takes consistency. It takes practice. Perfect practice makes perfect results. And the only way that you're going to get perfect results is by putting in the work, but doing it with high quality. That's the key that I want to leave you with for the weekend, right? In whatever aspect that you're working on today or tomorrow, over the weekend, bring your highest quality self to it. Because when you do, you're making that item better, not just one time, but every time. And that's how I treat this business. I am bringing my highest quality self to everything I can, because I want to deliver to you the highest quality experience possible. It's not about me. It's about you. It's about taking care of you. So thank you again for coming to today's trading room. I know this has been a boring week, but it's strategic. Mark Minervini, I don't know if you guys know Mark like I do, obviously. But he doesn't trade that much, and he's going to be the US investing champion for 2021. I believe he told me once, he's like, I'm only in the market for like half the time. The other half, I'm just waiting on the opportunity. That's what we're doing. We're waiting on the opportunity to work for us, because I guarantee you there are people blowing up their accounts right now who are crying and blaming everybody else that they are not able to control their emotions, and they're not able to trade with what the market is giving them. Not us. We're stress-free. And we're stress-free because we have a game plan that is back-tested, proven to work. And if it doesn't work, we're going to keep our risk super tight. So guys, thank you so much, guys and ladies, for coming to today's 10-minute trading room. I really appreciate it. I hope you have a fantastic weekend. See you back here on Monday. Hey, today I'm going to be giving you $5,488 worth of trading education for free. Yeah, for free, literally for free. This will help you find trades consistently. And here's why you'd want it even if it wasn't free, which it is. Number one, the money. So I've learned how to trade from billion-dollar hedge fund managers. I've learned how to trade from US investing champions. I've learned how to trade from best-selling authors
And I've learned how to trade from fake gurus. Listen, I put all those lessons together to find what works and what doesn't work in today's markets. And reason number 2 I want to give this to you for free is the gap. Most trading educators are just teaching the theory. And you and I both know that trading is the most lucrative career in the world. So if they're teaching the theory, why aren't they actually making money? And that's the gap. And that gap is crossed with trading psychology. Listen, there's only 3 parts to any solid trading system, just 3. Number 1 is the strategy, which is finding a proven edge, and that's your offensive weapon. Number 2, the risk management, your defensive weapon. And number 3, trading psychology, and that's balancing both your offensive and defensive weapons. And right there, that's where most trading educators break down. And the theory only goes so far. The true traders know how to adapt when the market shifts. So here I've got a massive opportunity for you, and you will finally live the life you always dreamed being a trader would be. And I'm going to give it to you for free. Why in the world would I do that? Well, it's because it's a blatant bribe. I'm not even going to sugarcoat it. I'm trying to bribe you to try my new coaching program called the 10-Minute Trading Room. And in the 10-Minute Trading Room, we have daily live video calls. I will send you our daily video trade alerts. I'll send you everything in our portfolio and all the updates that we make. I'll send you our daily market analysis. I'll send you our daily trade setups. And I'll send you our daily trading psychology. Everything we trade, you and I, we can trade it together. It's like getting a call from me personally every trading day with what we're trading and why we are trading it. Every trading day. Plus, every other Friday, I'm going to be holding live training sessions. And that's going to be just like what you're watching right now. We'll be building new trading courses together. And the reason we want to do that together is we'll be using your questions and finding the best answers. And these courses, they'll be available for members only. Plus, you can watch me personally showing you how to use these lessons in your trading. And you can ask as many questions as you need. You're going to get it all. I'm going to show you what's working in today's markets. And it's like an up-to-the-minute field report sent straight from the front lines of the cutting edge of trading. And then I'm going to show you how to model it in your trading fast. The only way to have access like this will be if you worked in my office with me, shoulder to shoulder, every day. So you're probably wondering about the cost. Now, as a member of the 10-Minute Trading Room, you're going to get everything. You're going to get the live video trade alerts, the live market analysis, the live portfolio analysis, the live new trade setups, the live trading psychology. All of that's included. Plus the live training and Q&A calls, the live look over your shoulder trading setups, the live trading courses built with your questions and your answers. That way you are confident in what we're talking about. And all that's included for just $147 per month. There's no contract and you can cancel at any time. Plus, I'll even give you the AI stock trading system course, our real trades case study course, and our bullish, bearish, and neutral option strategy courses. All for free. You're going to get the daily video trade alerts and portfolio updates. You're going to get the live training and Q&A calls. You're going to get the full catalog of our best-selling courses. And best of all, you're going to get access to a private members-only chat rooms. And that total value is $5,488. But of course you're not going to pay $5,488 for it. But it's $5,488 worth of training. And it's yours for free. Just by becoming a member. Now, let's talk about the membership dues. Like I said, it's $147 a month. That's not prohibitively expensive, but it's enough to keep the freebie-seeking knuckleheads at bay, right? But for the right person, this membership should pay you. So think about this. Would it be worth $147 to have me show you every single entry and every single exit point that we trade for an entire month? Don't you think that if you develop the trades like I created, you'd get the same results that I do? Now, if you're like most people, you tell me you'd probably pay for your membership several years over with just one of the proceeds from potentially one trade. And you probably tell me that everything else after that,
would just be gravy. And that's why I'm sending you our total trading system every month. I want you to make this an absolute no-brainer for you. Plus, I take a lot of pride in helping members win big and avoid those big losers too. So think about it this way. Would it be worth $147 for you to come spend an entire month looking over my shoulder, having me walk you through every entry, exit, and why? Personally showing you what's working and what's not. The daily trade alerts are meant to give you that same experience. And here's something else to consider. Would it be worth $147 to jump online with me twice a month to get all your trading questions answered? That's what we do in the live training and Q&A calls. Plus, you can see your fellow members and get ideas from what's working for them as well. Now, if any of those scenarios sound like they might be valuable to you, then this is a no-brainer, of course. And now that's why you should accept my bribe to become a member today. Remember, there is no contract and you can cancel at any time. Plus, you can keep the AI stock trading system course. You can keep the real trades case study course. You can keep the bullish, bearish, and neutral options trading courses all for free. And here's something interesting about the cost of the membership. So if you do the math, it's $4.90 a day. So if you do a Google search for what can $4.90 buy you, the best answer I found was 5 apples. So which would you rather have? 5 apples or a ready-to-go trading strategy personally created by me every month? So let's face it, $4.90 isn't going to change your life. Let's be honest here. But the work that we do together can change everything. So accept my generous bribe and become a member today. You'll be a part of a small group of high performers across the world that share valuable information that the rest of the planet never discovers. You'll discover the latest cutting-edge trading tactics and strategies before anyone else has any idea what hit them. And you'll be able to take our trade ideas and plug them in to your account effortlessly. Plus, you get to connect with me and your fellow members every other week on live video calls. So you can gain the help, the guidance, and the focus that you need. So take this offer and become a member today. Remember, you're under no obligation to remain a member, and you can cancel at any time, and you can keep all the gifts for free. Hey, speaking of gifts, there's one more thing I want to show you. How about 12 trading books? I'm going to give that to you for free. You know what? That's not enough. How about 12 trading books and the audiobooks to go with that? No. I'm not even done yet. How about all of that plus our top stocks list? You can get all that for free today inside the 10-Minute Trading Room. So let's get started. 10minutetradingroom.com, and let's get started right now.